This is Tom Kozlik, the head of research and analytics at Hilltop Securities. Thank you, everyone, for joining us again today. This is the 10th episode of our Politics and Finance Hilltop Securities Podcast series for 2021. During these discussions, we consider topics that intersect the worlds of politics and finance at the federal, state, and local levels with a focus on the United States. Recently, we have been concentrating on ESG, or environmental, social, and governance themes, and we will consider some of those today. But the world is changing and has been changing right in front of our eyes for just the last couple of weeks. I read on social media a day or so ago that what the U.S. is experiencing today is something like a combination of the movie Groundhog Day and the television show The Twilight Zone. And unfortunately, this is a pretty accurate description, I think, as of for now anyway. Even though we are close to the end of the summer in 2021, vaccinations are available, COVID-19 infections, hospitalizations, and deaths are on the rise again. To talk about what we are facing, we have someone who has spent over 2 decades in public finance-related positions in consulting, government, and most recently, she has been at a major ratings agency. Today, we have with us Lori Trevino, who is a public finance ratings analyst at Moody's Investor Service. She has been at Moody's as a ratings analyst for about 7 years. Before Moody's, she held government finance positions and was also in consulting. And she is a Harvard Kennedy School alum. Lori is based in San Francisco, and she covers local governments in Arizona and California for Moody's. Lori, thank you so very much for joining us today.
Thank you, Tom, for having me.
The timing of this recording is, and I don't want to say it's perfect because so many of the topics that we're going to be talking about in some cases have to do with life and death in some of these situations. But the timing, I think, is very important because there are so many themes that are, in fact, intersecting politics and finance, and they're really gaining importance. And I think that the results of what's happening very much have the potential to impact state and local government finances. And as a reminder, right now it's the beginning of August 2021. As I mentioned, the world is changing. Much of this change is the result of the spread of the Delta variant. Vaccinations are available. They have been available since the spring. They currently are still available, but the U.S. numbers are still stuck at just below 50% of the population that have gotten vaccinated. This is far lower than the goal President Biden set back in the spring. The number of COVID-19 cases and hospitalizations are rising at a pace similar to last spring and fall. The good news is that the number of deaths are not rising as steeply, but they are rising. And the fact that they are rising at all is tragic, and many lawmakers are taking steps to keep the rise of the virus at bay. Just last week, the CDC issued new guidance that recommends even those who are vaccinated should wear masks in areas of substantial or high transmission. As a result, some cities and schools are considering and even reinstating mask mandates. New York City on August 3rd became the first city that will require proof of vaccination for some indoor activities, such as dining and/or activities in gyms. Now, I want to turn to Lori to see if we should be concerned about the potential economic impact that governments might be facing as a result of this fourth wave of COVID-19 in California and in Arizona.
Well, thanks, Tom, again for having me. So I would say that the potential economic impact on governments of this fourth wave, particularly in California and Arizona, really depends on that jurisdiction's mix of revenues and whether or not their jurisdiction ends up back in some sort of a quarantine or lockdown mode. What we found in 2020 was that cities in California, for example, that were more reliant on sales tax or hotel taxes or any sort of revenues that depended upon people, coming into an office on transit, that those places suffered the biggest challenges in terms of revenue. Similar in Arizona, you might have expected that Arizona would have had that their local governments would have particularly had a significant financial impact from the pandemic in the last year, because they have such a high reliance on sales tax revenues. But interestingly, many of the local governments in Arizona were able to weather that that reduction in revenue, in part because of the broad nature of their sales tax, which includes things like groceries in some places. So you didn't really see quite the same level of revenue reduction. On the other hand, governments that have a high reliance on tourism in Arizona, just like in California, definitely saw challenges to their revenues last year. And the degree to which you might see that this year, if we end up back with travel being reduced, we'll see you could see some economic impacts again on those local governments in the current year.
So some of the most recent data that I literally just published from the New York Times shows that Maricopa County in Arizona and Los Angeles County in California are two of the top 5 counties where there are the highest number of new daily COVID-19 cases. Have lawmakers there considered or instituted steps to combat this rise?
Well, so Los Angeles County instituted an indoor mask mandate back in mid-July. And that is true for many counties across California. We saw a return to those indoor mandates at that time. Maricopa County does not have any sort of a mandate, but is definitely a move, amongst businesses to require their employees and their customers to have a mask if they're going to come inside. And so it's not a mandate, but it is certainly something that has been a concern. And of course, Maricopa County and Arizona generally was less restrictive in terms of mask mandates than California during the last wave as well.
Are there financial consequences at this point that you're expecting or that you're forecasting, or is it too early to tell?
For related to mask mandates?
For related to a combination of mask mandates and or a potential, I guess I'm kind of thinking back to where we were towards the end of July, August of last year. I guess I was referring to that, and I think that there are a lot of folks who were referring to that as kind of the reopening rollback. I'm wondering, I think that there were so many people over the last 3, 4, 5 months that were expecting that we were going to be able to continue to just go back to some level of normalcy. But it seems like this very well could, as you just mentioned, if there are areas that are more exposed to travel or tourism, that they could be more heavily impacted. Are we too early at this point to think that there could be some financial consequences, or is it based on what the numbers are, where the numbers are now? Is it inevitable?
Well, so we've seen as we've had counties in California opening back up, you've definitely seen a resurgence in just general activity, business activity, a little bit of tourism, not international, but maybe local within the state, and that has been a positive financially for those localities. If we see though that case counts are rising and to levels where they were last year, it would not be a surprise, I think, if some counties went back to some sort of more restriction in terms of travel and just allowing people to be in closer proximity, and you would definitely see a return to those kinds of losses of revenues, which could be difficult. I think that you've seen that people have just sort of lost their flexibility to manage through those kinds of personal income declines. Some businesses probably couldn't make it through a second round, I would think.
Yeah, I'm going back to kind of the end of March, just after the lawmakers in Washington passed the Rescue Plan Act. And at that point, we raised the credit outlooks of seven of our 11 municipal sectors. We were, positive
Hmm.
on municipal credit in general. That being said, one of the things that I pointed out, even a couple of months ago, was that it was going to be necessary to reevaluate our outlook on these assignments if a significant fourth wave of new COVID cases, hospitalizations, and or deaths develops. And I think that what we very well might be seeing is exactly that. So, as Dr. Fauci said, I remember at the beginning of last year, um, it's really the virus that makes the timeline. And on the one hand, right? I mean, on the one hand,
Right.
vaccinations have been able to get things opened up a little bit, but the fact that this is now becoming that this is running through those who are unvaccinated, it seems as though that's something that
Mhm.
lawmakers are going to have to deal with. But
Right.
stepping back, but still focusing on California, Arizona, one of the
Mhm.
things I was wondering is how has the pandemic affected local governments in those states?
Sure. So, in California, as you know, we have a pretty restrictive taxing environment for local governments.
Hmm.
Ever since Prop 13, local governments have become more reliant on sales, on voter-approved sales taxes and other kinds of taxes. And so they can't really increase their tax rates without a voter approval. And so they were really at the mercy of whatever the economy was doing. Um, and so those cities that are more reliant on visitors, whether they be commuters or tourists or whatever,
Hmm.
they would be they definitely felt a bigger impact.
Hmm.
So, for example, city of San Francisco, hotel occupancy was down 70, 80, 90%,
Hmm.
depending on what month we're talking about. Um, and because the office, central business district was essentially closed, there was a significant reduction in retail activity from the folks who would have been there, um, you know, buying lunch or shopping or whatever they might have been doing, plus the tourism aspect for San Francisco. So there was just a real significant effect on the city's on San Francisco's revenues, as an example.
Hmm.
Um, a city like Los Angeles had a little bit a, a, some different challenges. They're much more reliant on property taxes than on some of those other more volatile revenues.
Hmm.
Um, but it's just it's a very vast city. It's a little bit harder to turn that ship than some other places, and so some of the cuts that they needed to make to ensure that they were able to fund services. It was a little bit harder to do quickly.
Okay.
Um, so, but I will say that the American Rescue Plan Act funding that has come through in 2021 has been a real bolster to these cities that were losing revenues and having much more expenses related to the pandemic,
Hmm.
and will be a real it will really kind of buoy, I think, their finances, at least in the coming year, which will be of great help. In terms of Arizona, the cities in Arizona are much more reliant on sales taxes.
Hmm.
Um, generally it makes up 2/3 of the revenue of most cities, at least, and those can be collected locally or on the state level and then shared with them.
Hmm.
And they have the ability to raise their sales tax rates and to apply it to a variety of categories that you couldn't apply it to in California. And so what we saw in 2020 was that those cities that were taxing groceries, for example, and other sort of you know required purchases, really were able to manage through much better than those that did not.
Hmm.
But Arizona has a much more flexibility in terms of their ability to cut their costs. And so what you find is that Arizona cities tended to manage through the pandemic through cost cutting much more readily than California cities did. And their sales tax revenues did not decline as much as they did in places like California. Tourism taxes, on the other hand, are a challenge for Arizona.
One of the things that a lot of investors have been asking me about has to do with ratings upgrades and downgrades, and I'm wondering if there were some. And I know that last year downgrades slightly outpaced upgrades. I was wondering if there are any high-profile downgrades that occurred within local governments in California and Arizona, and that you can mention and why it is that they occurred.
We did have changes in outlooks.
Mm-hmm.
And for example, the city of Los Angeles geo bond rating was AA2 positive in 2019. And as we came into the summer of 2020, we changed that back to stable. At Los Angeles, like many cities in California, really learned the lesson of the prior recession, the Great Recession, which was really more of a real estate driven recession. And so, being really reliant on property taxes, they didn't want to have those kinds of risks, going forward. And Los Angeles had passed a minimum reserve policy and had been building its financial position over the last decade. And there'd been just a significant amount of development going on in Los Angeles, which was really driving that positive outlook. And as it became clear that, they were going to start eating into that reserve because of the pandemic, for example, that was one that we took off of positive and brought back to stable. City of San Francisco was a AAA stable. We moved that to a negative last summer as well. And that was really related to our anticipation that their property tax base might suffer because there had been such a tremendous amount of commercial development over the last 10 years, and because of the mechanics of the property taxing system in California, that could really drop off. Now, that wouldn't be something that would happen until fiscal 2022 because of the delays in the valuation that occur through that process, through that assessed value process. But we were anticipating that could have an effect on the city over the longer term. And of course, just the loss of so many of these more volatile revenue sources like hotel and sales tax and business taxes was driving that.
Now, has the considerable amount of relief from the federal government in the form of the Rescue Plan Act and some of the other relief that has been that's come through, is that something that is going to be considered in your near-term evaluations?
We have been considering that in our evaluations. Since those funds were made available to local governments, so they're getting those over 2 fiscal years, and it's already apparent that it's making a difference in terms of liquidity and just available funding for their increased costs related to the pandemic, and in some cases to lost revenues. So there's a lot of complication in how that money is allowed to be spent. The guidelines are many, many pages long, and I haven't made it all the way through myself yet. But regardless, we're definitely taking it into account that is is filling some gaps for cities in both California and Arizona, and counties as well.
Yeah. Are we at a point yet where we can ask and have an answer to what the lessons learned have been in California and Arizona based on what's happened over the last kind of year and a half?
Well, I think I mentioned a moment ago about the city of Los Angeles having put in a reserve policy. That was true for many cities in California. Shortly after 2012, 13, many cities started implementing these reserve policies. And those cities that had built their reserves um, really were able to manage through the at least the beginnings of the pandemic much better than others.
Hmm.
That was really part of the reasoning that we were seeing some upgrades and just more positive outlook on California cities in recent years. And really what I think allowed them to weather the storm, so to speak. And those cities that did not have those reserves in place and hadn't really used the booming economy over the few years prior to the pandemic to build up their reserves, they really had a much tougher time. And you could see there were lots more furloughed employees,
Hmm.
service cuts, and just general reductions in in what they were spending.
Hmm.
Yeah.
So Arizona made big news where tax policy was concerned this summer, at least in my mind.
Hmm.
And that's because the state instituted a pretty significant tax-related measure back in June. Arizona now has a 2.5% flat tax, and it's being described by some as a measure that, quote unquote, cuts taxes for all taxpayers. If that's the case,
Hmm.
I'm wondering what the financial consequences for Arizona local governments and especially cities and schools
Hmm.
are likely to be in coming budget cycles.
Well, I think it's really important to note that this change in tax policy was a reaction to two things.
Hmm.
First of all, that there had been a significant increase in state revenue in the last decade, and that the state was anticipating a $2 billion surplus for fiscal 2021. And that was combined with voter approval of a proposition. Proposition 208 was approved in November of 2020. And that measure applied a 3.5% income surtax on individuals making 250,000 or joint filers making 500,000 a year, and those funds were intended to be earmarked for K-12 public education.
Hmm.
And so the proposition, I think, was surprising for many in the state that is really known for its conservatism and being generally anti-tax. Um, but I think it's really indicative of demographic shifts in the state. The population of Arizona has grown dramatically in recent years.
Yeah, so
Um,
this isn't good. This isn't going to happen without the growth that's been going on.
Exactly.
Yeah.
So there's been
Okay.
a lot of younger people coming into the state, particularly into Maricopa County, and you've really seen a shift in politics in Arizona and in Maricopa in particular, to be somewhat more liberal. Presumably, these folks are coming from places nearby, perhaps California. Um, and they're more interested in increasing funding for schools. And
Hmm.
Arizona has had one of the lowest per pupil funding levels in the U.S. for years. So the state went from having a somewhat progressive tax rate of going from 2.5 up to 4.5% for income at the highest bracket, to now having this flat tax plus that 3.5% surcharge. So I think that the finances for the state have been improving pretty significantly in recent years. We did actually upgrade the state of Arizona to AA1 in 2019.
Hmm.
And that was in part because of this tremendous economic growth going on in the state. And so it will potentially reduce or shift the amount of revenue depending on how it works out relative to to the income levels of the residents. I think that the question will be in the future. So is the state going to essentially, swap the money from the 3.5% surtax with funding they would have been giving to schools regardless? Or are they going to increase funding to schools because of that? And Generally, though, income taxes flow to the state, so it's up to it will depend on how the state decides to allocate things. There is an urban revenue sharing component to the state budget, where based on populations, state revenues are shared with local governments. And when times get tough, that has been a place that the state has cut in the past. But for the moment, when you're seeing tremendous growth, economic growth, it's hard to anticipate what the impact might be on those kinds of state shared funds when a recession comes, depending on what kind of recession it might be.
Right. That makes sense. So,
Yeah.
so one of the things that I wanted to make sure that we touched on, it has to do with ESG, or environmental, social, and governance factors, and that's going to be the last thing that I'm going to
Mhm.
ask about here. ESG themes have become more important with investors in recent years, and with state and local governments. I think that if anything, most people would agree that environmental factors have also been getting an increased amount of attention this summer. David Wallace Wells described the recent backdrop as a quote unquote climate permanent emergency in a July 1st article in New York Magazine, and especially in California. And when I was just in Minnesota last week, I could smell the wildfires that were coming down from Canada. Heat stress and an increased risk of wildfires exist and are among the challenges that local governments that you cover, especially in California, are faced with. I'm wondering,
Mhm.
how can local governments best manage these or environmental risks, and or are they taking steps to manage them?
The last couple of years have been kind of a rude awakening in some ways for Californians, and to some degree for Arizonans as well.
Hmm.
We've seen increases in heat waves, and along with that, we've had challenges with wildfires and our investor-owned utilities that serve, particularly in California, being involved in those wildfires, and in some cases doing rolling blackouts during heat waves to do two things. One, to conserve energy so that we can shift it to places where it's most needed, but also to reduce the risk of starting a wildfire if that heat wave happens at the same time that you've got some sort of wind event in the Sierras. You might see areas that are dependent on the transmission of power through those high wind areas lose power for a while because they don't want those lines activated during a big wind event. And you can see, obviously what happens when, we saw the tragedy in November of 2018 for the town of Paradise and other parts of Butte County in California. But last year, for example, we had a heat wave in August that occurred right around the same time that we had some pretty significant wildfires. I think it's difficult for local governments to be prepared for those things. So, those local governments really have to be ready to sort of deal with those emergency situations.
What you're saying is that they're going to have to be reactionary. There's a lot of
Yes.
there's not a lot of preparation. Okay. Okay.
I think it's hard to be prepared other than to just know that you need to have those emergency plans in place.
Hmm.
In California, certainly we have we have a well-developed emergency response system
Hmm.
statewide. Um, and but it sort of ends up feeling like you're in sort of a permanent emergency state during late summer, because there's always going to be a fire somewhere,
Right.
um, or a heat wave somewhere,
Right.
and if you add to that power outages, then that becomes a big challenge.
Right. Well, I think that challenges seems to be the theme for the summer of 2021.
Yes.
Right. Lori, thank you very much for joining us today to talk about what local governments in Arizona and California are facing. I appreciate it. I really enjoyed our discussion.
Well, I'm
For
happy
all,
to have been here. Thank you so
thank you.
much.
Yeah,
Yeah.
thank you. And everyone listening, you can see the recent Hilltop Securities economic and municipal commentary and listen to our podcasts by going to hilltopsecurities.com/commentary. You can follow me on Twitter and LinkedIn, and want to thank everyone again for joining us today. We look forward to bringing you more color in the future related to topics that intersect the worlds of politics and finance.